Hi. So last week we have seen about the importance of the financial planning. One we have seen emergency fund, after that the health insurance, and this time we see the importance of the life insurance. See, as far as the life insurance is concerned, there are three types of life insurance policies available. One is the term insurance, which is not being taken by most of the people. And second is the ULIP policy, which is primarily our investments and insurance is mixed together. And third is the endowment policies, which is primarily, it's a traditional policy where you could get about a small return on investments. First, we'll discuss about what is the need for a term insurance. See, the term insurance is something where if something happens to the policy holder, the nominee will be receiving the sum insured. So this term insurance is required for anyone who is actually an earning member in a family. If husband and wife is working, the term insurance is required for both of them, because what we are doing is, in the financial planning, when we are there, when we are not there. So when we are there, we actually create a wealth to take care of all the goals or objectives or the financial obligations that we have. On the other side, if we don't, we are not, like, due to some unfortunate event happens to us, our family should not put on financial stress. So for that, definitely any working person require a term insurance. So this is actually something where you pay a minimum premium and the maximum coverage. So that is something is required for any individual. And secondly, the endowment policies. See, these endowment policies will be providing you a return between 4 to 6%. And if anyone needs a kind of an endowment policies, we would recommend not to go with the endowment policies. You can separate the insurance and investments separately, because if you need an investment product, you can look at the investment product. And if you need an insurance, you can look at a pure protection plan. The third insurance is ULIP. So here actually, the money will be collected and then invested in certain portion into insurance, certain portion into investments. So the investments will be done in the equity market. This is primarily, they will be investing your money into the stock market or the debt market based on individual preference. So we normally don't recommend a ULIP policy because of their very expensive compared to a mutual funds. So the ULIP policies contains 4 different charges. One is the mortality charges, second is the allocation charges, third is the fund management charges, and fourth is the administrative charges. So all these charges will be deducted from the investments that you are making. The balance money only will be invested in the market. So the returns are comparatively, though they are investing in the equity market, the returns will be better, but still the expenses are very high, and hence it is not recommended for any investor. Now let's see how much insurance coverage is required. That's a big question everybody has. As far as the coverage is concerned, it can be considered in 2 different parts. One is the minimum requirement is actually based on your annual package. Assuming if your salary is let's say about annually 5 lakhs, then minimum 10 times of your annual coverage is what actually annual package is what you need to have the coverage. That means 50 lakhs is the minimum coverage you need to have, and maximum you can have up to 20 times of your salary. This is not that is something that we can go for it. There is something which we call it as the human life value, where we take all your expenses and all your the liabilities, and then we calculate the human life value. So this is actually something one can probably explore with the advisors, the well expert advisors. You can probably connect with them and understand what is your human life value is all about. Thirdly, Is anyone, everyone require a term insurance? My question to this is primarily no. Because if you have, if you have an asset which is backed up by all the liabilities, then you don't require an insurance. Term insurance or any insurance is not required. Insurance is something, which will replace the financial liabilities that will be, put on to the family in case of if someone is not, someone is living in between. So if the assets are backed up by the liability, there is no insurance required for anyone. About how to select the best insurance policies, we will see it in the next session. Thank you.